talk real quick about charitable giving and not-for-profits before I turn it over to Cory to go a little more in depth into some of these, the pass-through deduction things. Any questions on what I've talked about? Some of you look scared. Really overwhelmed. Yeah. So we got a question about what's going to happen with charitable giving as a result of the law, and like I said, nothing really good. Increasing the standard deduction is going to take away the benefit to a lot of people to make charitable contributions. Increasing the estate tax exemption is also, I guess, going to reduce your incentive. A lot of people think that maybe their favorite charity can make better use of their assets than the IRS is theirs. So, you know, and this probably doesn't come up a lot in name, but sort of a loophole for donations to aid tickets to college sporting events. What's helping is increasing the charitable contribution deduction limit. Previously, you could only offset 50% of your income with charitable those cash contributions. That's up to 60%. And the P's limitation on that slide, that's sort of a phase out of itemized deductions that's been repealed. So people who do itemize and you do make charitable contributions will get a better benefit, but most taxpayers, again, far fewer taxpayers are going to itemize at all, and therefore may have less of an incentive to make contributions in the first place. A couple of things we're recommending that will help you get around that situation. Charitable contributions from an IRA, still a thing that was made permanent in one of the 2016 tax acts. That's great because you don't have to report the income and it's not an itemized deduction. If you are taking RMDs and giving the money to charity, this is almost a no-brainer. So, you know, would certainly recommend this as a strategy. The other thing, and this is what I was talking about earlier with what I call the goodwill type advertising. If you give money to a charity and it's for a fun run or a golf event or something like that, and it's to a charitable organization, but your primary motive maybe is to get your name out there and keep your name out there, and you get an expectation that you're going to get some business from it, like it's going to be a part of your prospects and customers. You can classify that as advertising expense. That's always been the rule, but in the old days, passive entities often didn't have an incentive to differentiate between contributions and advertising because they just never ran up against that 50% limit on personal returns. I think one thing that everyone should do now is kind of, as you plan out what you're going to do for 2018, consider if you can do something with the charities you've been supporting that fits within this definition and gives the people who might be paying you a much better tax deduction, because then you can avoid the limit on the amount of advertising expense you can take. So that's just kind of another general recommendation we're making. Other changes impacting not-for-profits. I talked earlier about the qualified transportation fringe benefits being non-deductible as the parking passes and things. Obviously, that doesn't hurt a nonprofit, so they're instead making that UBIT, making it taxable if you choose to provide it tax-free to your employees. They've got new rules about calculating unrelated business income on a separate basis. Is anyone here from a nonprofit or familiar with this issue? I won't spend a lot of time on it then. Essentially, during IRS audits of nonprofits, they say if you've got an activity that loses money year over year, you don't have a profit motive in there, therefore you don't have a business, therefore you don't have an unrelated business. And then there's also an excise tax on compensation in excess of $100 million. 20% of the amount over $1 million for the 5 highest paid people. If any of you are worried about that, please tell me where I can send a resume and then you can hire me for tax season. So I'll turn it over to Cory to talk a little bit about the tax deduction.